WCAB, because, as we all know, taxation with representation has not been such a good idea. Good morning, everyone. Yeah, we let a couple of songs roll there. We were getting set up. I am running a little late this morning, but I am researching tax law right up until the last minutes. And why do I do that, Todd? Because I'm an enrolled agent. An enrolled agent is a person who's permitted to practice before the IRS. I got the new IRS logo this week from the IRS that they promised us about a year ago. They're a little behind schedule, but we got it. And it says enrolled agents admitted to practice before the Internal Revenue Service. I thought it was a great looking logo. I'll be putting that on my website later today. We are admitted to practice before the Internal Revenue Service. An enrolled agent is a person that does basically anything to do with taxation. We're supposed to be tax experts. EAs, CPAs, and tax attorneys are among a select group of people that can represent you when you have a problem, if you have a problem, but it's becoming more like when these days you have a problem with the Internal Revenue Service. I can also help you with tax problems. My name is Gilbert Carmona. I have an office right here in Rutherfordton at 113 Whitesides Road, right up the street from the station. I have another office in Tryon, the beautiful Art Deco building right off the historic Tryon downtown at 226 South Trade Street. My office number is 828-289-9300, same number for both offices. And if you need to send me an email, my email address is gilbert@gilbertcarmona.com. My engineer this morning, Todd. Good morning, Todd. I was up at like 5:30, and I got on the IRS website and they're finally getting back in the role of issuing guidance on a lot of this new tax law, revenue rulings we call them. They just issued Revenue Ruling 11 about the SALT limits. So. If you have a question for me, you can call me here at the studio or send me an email. Studio telephone number is 828-287-3356. Now, it's official. I talked to Jim. We are going to be doing next week's program live. Todd, is that right? Live. My able IT expert, Rafael, has been talking to you, and I guess you've got all the details worked out? Yes, Cassandra will be handling the on-site preparation. I need to get her over with Phil. So I heard, I'm sorry, I am perspiring. It is hot in the studio this morning. It's supposed to be hot today. It's a beautiful morning. Beautiful morning. It's 54 degrees out there right now. And it's supposed to get, into the 70s? Today. 71 today. Perfect. It's a beautiful day. The flowers are everything is in bloom. So we're excited. 1 week left, really. Well, 1 week and 2 days left to this tax season. April 15th at midnight. We have to have those tax returns filed or extensions filed. Going to talk a little bit about that. Going to talk a little about what to do if you're not ready to file your tax return and you have to file an extension. What to do. Going to talk about some last minute things. And then I've got a plethora of questions that people have asked me, and different questions that people have asked a lot of my other accountants and CPAs that I network with, and some of these are very interesting. I compiled a list of 10 incomes that are not taxable. A lot of people, there's certain things they think are taxable, and when they come to me, they're not taxable. And Amy Fortinelli, they're actually put the list together. I added a few things to it, and of course I'll have my commentary on it, Todd, as I do about pretty much everything. The program is Gilbert Talks Taxes. So getting back to next week, next Saturday, the 13th, we will be live broadcast from NC Tractor. Now, we're not going to be able to do the commercials, so you know what we're going to do with the commercials? We're going to do them live. I'm actually trying to get some of the people that did these commercials to come in and do them live. So we'll see how that all works out. That should be fun. And Phil, now my program is going to run from 8 to 9 there, just like any Saturday. That will be the last program that we are going to do for this tax season. And as I have said before, we are going to see about doing something else during during, I don't know, I just don't think people want to hear about taxes all year long. Although there's a lot of other things I could talk about, financial planning and insurance and some of the other things that we do, tax planning, which is why I usually start the program a little early in December before tax season to get some tax planning ideas and tips out there. So we'll see what we're going to do, but we are going to take a little break. Good Friday, Passover, Easter Sunday's the weekend after. 15th falls on a Monday. Then we have that weekend. We're going to shut the office down, take a few days off the following weekend, and then regroup and come back and see what we're going to do. So that will be the last program on the 13th. Now, after our program, Phil, which normally NC Tractor Supply, opens at 9. So Phil is going to go into an open house, and you guys are going to be there broadcasting from 10 to 1. That's what I heard. That sounds like a lot of fun. So we're going to be all set up for my show, and then we just go right into it. Right, and you're going to be, are you the ones going to be there? Live from 10 to 1? Fantastic. Fantastic. Well, we're going to have a gallon of coffee and a couple of dozen donuts there, so you should be pretty ready to go by the time 9 o'clock. Excuse me, by the time that rolls around. And I heard Massey Ferguson's on board with maybe doing something there. Maybe I should talk to Phil. Maybe they'll hire me as a spokesperson. Gilbert Talks Tractors. Why not? You know, when I was a child, I used to watch Orion Samuelson. Do you remember him? He's actually still doing it. He used to do the Farm Report at 5 in the morning. He would do, during daylight savings time, he would move it back 30 minutes to 5:30. But he was on WGN out of Chicago doing the Farm Report live. Maybe that's why I like to get up at 5 in the morning so much, because I used to love to get up and listen to Orion Samuelson give the Farm Report and to tell us. I think I was the only child in school that knew what the price of pork bellies was that day, and corn and silage, and I didn't know what silage was, but I thought it was so interesting. So Gilbert Talks Tractors. Yeah, he's still alive. He is still alive. He is still doing the Farm Report. I don't know how old he is. He's got to be in his 80s. Oh, look at this. Mr. Research here pulled it right up. He was born in 1934. So that makes him 85. He's still alive. He's still broadcasting. He still does, and he's really found a whole other market. I came across him a few years ago on a video. He's found a whole other market with young farmers. He's really like the old scholarly grandfather, giving them tips, and because it's a whole new world in farming. And when you go, people need to stop by next Saturday to Phil's open house and see these tractors. They are incredible machines. They're just wonderful. Actually, I got involved with Phil. I went over there to look at a tractor for myself, for my vast 2-acre holding that I have. I wanted to buy one of those little tractors. Basically, it's a diesel lawnmower is what it is, but I wanted to buy one of the little ones. And so Phil, I'm Gilbert. Gilbert, come on. He said, Gilbert Talks Taxes. I said, yeah. He said, I listen to you. So anybody that listens to me is okay in my book. So we started doing some commercials for him. And it's really, I just think he's a wonderful guy. I enjoy going over there. So next Saturday, we will be there live. Todd and I, Jay will be here in the studio, manning it, and we're going to have all kinds of things going on. The last program of the year, Gilbert Talks Taxes. So let me get into a few of the questions that I get, because I get comments during the week about the program, and I got comments about my little introduction, my monologue last week. I talked about what's happening in the political scene with liberals and conservatives, and I said I really feel that we're going to see a third party in this country. It's the first time I've ever felt we would have a legitimate third party, and that party is going to be a leftist party, and there will be a socialist party. Although, don't be deceived, and that was the comment during the week. Several people said, thank you for that. You really explained it. But the comment that stuck most with so many people was, don't be deceived, because they'll put the word democracy or Democrat or Democrats or Democratic in there. But you've got the word socialist in there, and that's what they are. So thank you for the comments and the encouragement. Several people said your show should be about that, but I think there's just too many people talking about politics. I really don't want to talk about politics. I want to talk about life. So let's talk about life. Get questions. Now, everybody pretty much that knows they're getting a refund because of child tax credit, earned income tax credit, those people have already run to their tax preparers. They're thinking this year professionals are going to prepare somewhere around 80 million tax returns. Professionally prepared returns. I think that number's light. I think that number's short, because with the new tax code, I'm having a lot of people that said they've always done TurboTax. They already did their tax return on TurboTax and used some of these other free programs on the internet and came up with different numbers. And I had several people say, I wanted to pay you to look at this and tell me what's going on here, because there's several issues with the law, especially, not issues, there's just several gray areas. And it's the terminology, the qualified business income deduction. Originally they were saying it was a credit, they were calling it QBIC, then they said no, it's QBID, then they just called it QBI. Qualified business income, and you get a deduction based on that number. And there's a few factors that go into that number that's changed a few things. So pretty much everybody that knows they're getting a refund because of earned income tax credit or pretty reasonably needed that money, went and did their tax return, that crowd is done. Now we're getting people that almost always owe money, they know it. So it's just, they're the ones that come in and say, what's the damage? But then there's a whole other crowd now that starts to come in. And those are people that either did their tax return themselves or had somebody done and a mistake was made. So I get a lot of questions about what happens if there's a mistake. What happens if I already sent my tax return off and I get a letter back from the IRS or North Carolina or whoever? You could, in some areas, now it's not here because we're a small, especially we're a rural community, but in some bigger cities, you will actually have in your tax return. It's I see it more up north, although I do see it in some parts in Florida. You could have a county tax that actually is a tax return within the state tax return. There's a county portion, and there is a city portion within that tax return. If you've ever worked, maybe you live in North Carolina, but you travel and work in other places, and you work, Ohio has this, Pennsylvania, some of the New York has it, certain parts of New York will have a new city tax and an old city tax. So, and you'll see it on the W-2. If you get a W-2, if you're self-employed, you just kind of work that out. But you see these different levels, and those things all have to be done within the tax return. So a lot of mistakes get made there. The software just can't handle every scenario. So what do? And I'll tell you, let me say it this way. There's two kinds of mistakes. There's a willful mistake. You blatantly know you did this wrong, but you did it anyway, usually to get back more money. And there's just honest mistakes where paperwork got omitted. Okay? And so what kind of mistake you have determines how you handle your mistake. We've made mistakes. I make mistakes. There's two kinds of mistakes. Something got omitted. Now, if the taxpayer comes into my office and we go through the interview, you're a new client, we go through the interview and ask you the questions, I'll ask a client, what are your sources of income? Where did you get your money? Oh, here's my W-2. And then they get a letter from the IRS about the business income you didn't declare. And they come back and they said, you did my tax return wrong. No, I didn't do your tax return wrong. You didn't tell me you had business income. Okay? You didn't tell me you had business income. So it's very important you tell your tax preparer everything, just like if you're doing it yourself. You got to let me know everything, and I try to ask as many questions. But there are so many different Variables, I can't ask you every question. Most of my clients are repeat clients, so I know what happened last year, and I've got last year's tax return. We start there with the organizer, and we move forward. That captures a lot of mistakes. But now, so you made a mistake. You got a letter. A lot of times the letter will tell you what to do. We saw a lot of mistakes with Obamacare. A lot of people didn't know that a 1095 was a tax document. They thought it was just something from Obamacare. The envelope's pretty generic, it just says your information. And then in front of it, there's 3 pages of instructions in like 9 different languages. Nobody ever reads those instructions. Why can I say that? Because people bring me that envelope. Many times that envelope hasn't even been opened, because by now they know what it is. So nobody reads them, or if they do read it, it doesn't look like anything they're aware of, so they leave it out. So you're going to get a letter. That Obamacare error, you do not have to amend your tax return. You have to fill out another form in 8962 and fax that to the IRS. You will either owe money because you were over-subsidized, or you will get a refund, a repayment because you were under-subsidized. That one can go either way. And I've had people that have had to pay back a lot of money. So that's a very serious one. So what do? Go back to your preparer right away. Come to me right away. Now, we made a mistake this week. It was our fault. There was just in the paperwork shuffling. I won't sugarcoat it. It was my fault. A document got put back in the file that should have, as in our office it goes, there's a couple levels of review. The paperwork, one paper got left out of the paperwork flow. So it changed the result. Now, I have a policy in my office. If we make a mistake, we refund you your money right away. That's just if you've already paid. If you haven't paid, you don't owe anything. And we'll finish the work. Okay? That's just my policy. I've been told by my back office that very few people do that. But I just think it's part of having integrity. If you came to me and I did something wrong, the first thing I do is give you your money back. Now, the second thing we do is fix it at no charge. Okay, and the reason I'm on this topic is because, like I said, we had this experience. We made one mistake, and we've made mistakes before. It happens. We've made mistakes. Again, if the taxpayer tells me that's not a mistake, or doesn't tell me something, that's not a mistake. The taxpayer didn't give me all the information. In this case, it was a mistake. We were wrong. Okay, now, I will fix it. Do we have to amend? In this case, we amended, put that paper in there, changed the numbers, called the taxpayer in, went over everything with him, gave him his check, number one, then did the amendment, told him what we needed to do, and I will follow that all the way through to completion. Because I'm an enrolled agent, I can get on the phone with the IRS, I can get on the phone with North Carolina, I can get on the phone with whoever that I have authority to talk to, and I will make sure it's fixed. Okay? Now, because we caught this mistake before April 15th and made all the appropriate changes, there will be no interest and no penalty on this mistake. And that raises the question of who is liable for penalties and mistakes. Okay? And just who is liable. Okay, now, as far as the IRS is concerned, we're going to take a break here in a minute. When I come back, I'm going to have some actual questions I'm going to read. As far as the IRS is concerned, it is all your problem. 100%. Notice that little pause there? I want that to sink in. It is all your problem. You sign the tax return. Okay? You're supposed to approve it before you sign it. Now, I get it. Most people don't understand it. That's why they came to a professional. Like the man said to me one time, if I knew how to do a tax return, I would do the tax return. I wouldn't come to you. But you come to me, and that's why I walk people through. Those of you that come to me know I will show you the tax return, and I will go through every form. Because every form is there for a reason. There is a number on every page. Okay? Some kind of number on there. And we will go through it, and I will tell you why that form is there. Sometimes these forms, they're head scratchers. You're like, well, why is this form even there? And then you go, oh, because. this that happened over here came over here, and that went there, and those two numbers make this number, and there you go, and that's why it's there. And we go through it. We go through every line item and make sure. Now, there are some people that say, look, I don't care. I still go through it at least maybe a little faster, and then I got people that want to go through every line. But wait a minute, you said line 5 was $4,200. I should only be $3,600. We'll go through it. We'll find out why. Remember, we have a new tax form. It is a postcard with 6 schedules. Okay, but it is a postcard with 6 schedules. There's no longer a short form. There's no longer an EZ. There's no longer an A. There's just a 1040. And if it's the short form, you have no schedules. If it's the long form, you have all the schedules. So, but we go through it. When you sign that paper, that 8879, so I can electronically file it, or if we have to paper file for some reason, and usually it's because there's a form that electronic filing doesn't support, or the amended returns have to be paper filed, you're going to sign that tax return. I sign that tax return. Okay, and even the electronic tax return, I sign. But if there's a mistake and money is owed, it is your responsibility. Now, what can you do against the tax preparer? Let me get into that right after the break. This is Gilbert Talks Taxes, WCAB AM 590 FM 100.9.
This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300. People come up to me all the time and say, Gilbert, thank you for doing my tax return. I just got my refund. Any idea what I can do with that refund? Oh, yes, I've got an idea. Call NC Tractor and Farm Supply on Railroad Avenue. Get yourself a brand new Massey Ferguson. You can call Phil at 828-429-5008. And when you're talking to Phil, mention you heard it on Gilbert Talks Taxes. You know what he'll do for you? Absolutely nothing. But me, he's going to give me a discount when I buy my Massey Ferguson.
We are back. WCAB. AM 590, FM 100.9. I was listening to that FM Thursday. I can't remember now. My days are all one. I was listening to it. It sounds great. It really, so I probably sound very good right now on that FM. Those of you, I didn't welcome our live streaming, and a lot of you are live streaming on www.wcab59.com. We have the live stream there. You can see my vintage spring tie there. It is just a beautiful day. I cannot get over it. Spring has sprung already here. Temperature right now, it's still holding. It's still 55 degrees, but we will get up to 71 today. So what happens if there's a mistake? I've got a few questions here. Let me get to some of the with some of the shorter ones. Now, this is a mistake I find very common when people come to me from another preparer, that they've had a problem. So a person wanted to know, my tax preparer did my income tax just using my last pay stub. But on my pay stub, it did not show that I made vacation pay and overtime. So he did not put the overtime or the vacation pay, and now the IRS is charging me almost $5,000 for not reporting those earnings. I took the letter to him. He went back to look at the tax file. He told me that I'm going to have to pay it because we used the check stub, and I never told him about vacation, and I never told him about overtime. And this man at least admitted it is true. He said, but $5,000, is he liable for any of that money? What can I do? Okay, well, let's start with he broke the law. Okay, literally the law. Now, I don't know enough about this tax preparer. Let me back up. I'm assuming your tax preparer is also the ERO. I am the ERO. That ERO means electronic return originator. So when you come to me, there's actually a couple of different hats that I'm wearing when I'm doing your tax return. Number one, because I have financial licenses, I do a little bit of tax planning. Those of you that have businesses and have a lot of investments and are interested in, opening up an IRA or interested in maximizing your 401k, and you have those kind of questions for me, I can do that. I'm also preparing your tax return. There is no license to prepare a tax return. Anybody that can go buy software and get a PTIN, that is a practitioner ID number, okay? Anybody that can get this number can prepare tax returns for a fee. Now, there are people preparing tax returns illegally using TurboTax. When they print your tax return, on the bottom there of page 1, because now it's a 2-page postcard, remember, on the bottom of the front of the postcard, there's the preparer information. It used to be on page 2 of the old return. If you notice, mine's completely filled out. Okay, so there is an electronic return originator. That is the person who actually takes that tax return and sends it electronically to the IRS. Okay, I am an ERO. I've been an ERO now for, I lose track of time, 16 years, 17 years. You had to be fingerprinted, go through a whole process. It took about 5 months to become an ERO. I am an ERO. I've been good standing ever since. ERO rules are, you are not supposed to transmit a tax return that has W-2 income, wages, without you looking at that W-2. I've done several shows on this topic. People will come, especially those people that want to get that tax return in right away. That crowd, that comes, they're at my door January 5th, January 6th, with their last pay stub and want to go ahead and get their tax return done. And I tell them, I can use that pay stub to kind of give you an estimate. But as far as filing your tax return, no. I've got to have the W-2. I have to look at the W-2 from your employer. Now, what happens if the employer's gone out of business, your employer did not do the W-2s? Again, I've done shows on that. There's forms, there's procedures around that. That's very few and far between. Okay, very few and far between. There's literally a handful of people that I've ever seen have that problem. Okay, most people will have that W-2. They just want to get in there early, or they'll lose it and they don't want to go through the procedure of getting another one. Now, most places, if you lose it, let's say right now you lost your 2018 W-2, most employers will give you another one. By the way, they can send me an email, they can fax me, they can fax it to me, they can send me an email. I don't need to see the original. Okay, as long as I know, and I know it came from a legitimate email. If you work for AT&T and I get an email from human resources at AT&T.com, I can reasonably say this is a legitimate W-2 and I can use it. It's when I get these funny Photoshopped looking things that I stop and say, no, I want to see an original. But typically though, especially if I call and we get it. Now, some places can and do charge you for prior years or lost W-2s. They can. That's legal. They can do that. I've had people lose their 2017. They call their employer. Their employer says, we don't do that anymore. It's a prior year. You have to go to, and they'll subscribe to a service. There's many of them. They'll give you a website. They'll say, go to this website, log in, you put the name of the company, you put your information, or they'll give you a PIN, a PIN, a PIN. You put that in there, whatever the procedure is, and they may charge you $9.95 or whatever. It's usually a minimal fee. It's enough so that next year you remember, I don't want to lose this paper, or it's going to cost me $10. And the time. That is legal. They can do that. Okay, and you can print that, or you can bring me the PDF of that. And again, that is legitimate. But to create your tax return using your last pay stub is, the IRS specifically says you are not supposed to do this. So this man has violated IRS law. So he is flat out wrong. Now, who's liable for the money? The IRS said $5,000. That's you, my friend. I know it says, he ends his question with, boy, that's a lot of cash for me to pay for a mistake he made. No, it is not. That is, you owe that money. Now, the question becomes interest and penalties. That becomes the question, because I don't know if this $5,000 includes, there's typically a failure to file a penalty, failure to pay penalty, there's a miscalculation error penalties, and then there's interest on top of all of that. Some penalties the IRS will waive. Interest can never be waived by law. But the big thing is you are liable for it. Now, what you work out with your tax preparer, that's between you and your tax preparer. There is no law about that. There's no place. Now, you can file a complaint against your tax preparer. And I'm going to get into that one here in a minute. Boy, time is just flying. Time is just flying. I wanted to talk about the taxes that are, don't let me, Todd, you got to keep me on track here. Let's go ahead and take the next commercial. Let's go ahead and do that. Gilbert Talks Taxes, WCAB 590 AM, FM 100.9.
This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherfordton. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you. This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business.
We are back. The International Morse Code Signal for help. Those of you live streaming me, good morning, www.wcab59.com. My telephone number, I'm going to give it again. Right now, if you call me for a tax return, the answer is probably going to be, I'm going to have to extend. At this point, with 1 week left, you're pretty much going to get extended. Now, I'm going to get back to the practitioner thing here in a minute, but let me say this. You're going to be extended at this point. So we extend you. An extension to file is not an extension to pay. The IRS website says that, by the way. I thought that was catchy. An extension to file is not an extension to pay. I can look at it quickly and tell you more or less if I think you're going to owe. If you just have W-2 income, you've been busy, haven't gotten around to doing this, I can tell by looking at it if you've had enough withholding. If you think you might owe, you're supposed to send an estimated tax payment. You should send an estimated tax payment just to cover it. If you owe less than the estimated tax payment, of course you'll get it back. There will be no penalties or interest for doing that. If you come up short, there is the penalty for underestimating. It's not a big number, but it is there, and you will do it. Now, North Carolina has an extension form. South Carolina does not. South Carolina, if you have a federal extension, and it is a request, it's automatic, you'll get it, but it is a request. So it has to be done. It's not automatic just because you couldn't do it on the 15th. You have to request it. Now, South Carolina, however, if you've requested a federal Form 1040 extension and you received that 4868 form and you have it, they will accept that as proof. They do not have a separate form unless you want to send some money. In which case, if you're going to send an estimated tax payment, they do have a form. Okay, so that's the 15th. By midnight, those have got to be done. We're already extending people. There's people that have already said, please extend me, I'm not going to be ready. And then there's people that have said, let's just extend to be safe. And then there's people that just aren't going to have their paperwork. The banks haven't gotten them their paperwork. K-1s haven't come to them. There's a lot of reasons why we extend. It's not always that they just couldn't do it. There's things that need to be worked out, details that need to be worked out. So we extend, and that is for your Form 1120 for your corporation that is due on the 15th. Your fiduciary 1041, estates and trusts, is due on the 15th. and your personal Form 1040 is due on the 15th. Now, last week I talked about April 1st for your required minimum distribution. So that date came and went, folks. If you turned 70 and a half last year in 2018, if you turned 70 and a half and you have retirement income in an IRA, a 401k, any employer plan, self-employed plan, you have a required minimum distribution, you were supposed to take that by last April 1st. If you didn't do that, you may want to see your tax preparer, you may want to see me, because there is a penalty, and that penalty is, are you ready for this, Todd? 50% of that required minimum distribution. That can be a huge number if you have a lot of money in a retirement plan. But they do grant waivers if there's reasonable, reasons why you didn't know that. Okay, so let's get back to this. Now, the tax preparer filed his tax return without a W-2. Okay, that is wrong. Should never have done it. He is liable for something. He's not liable to pay your tax, because you would have owed that tax anyway. Okay? Does he want to pay for some of the penalty? Does he want to pay for some of the interest? That's between you and him. There's no guidance on that. Okay? Like I said, with me, this particular scenario would never happen, because I will not do it. I've had people leave. Well, I want to do it with my pay stub. I don't want to chase my employer down, whatever their story is. I say no. The answer is no. Again, I can look at it and tell you what I think you're going to get back based on that tax return, based on that pay stub, just, as a financial planning tool, but not as a prepared tax return. I will never print a tax return with that information. It just isn't going to happen. Okay? Because it's illegal, plain and simple. And why? Why? Because your last pay stub is missing all kinds of information. It has not been reconciled. When I do payroll, which we have about a dozen payroll clients, typically I like to let ADP or Paychex do payroll, but we do have clients we do it. I reconcile and make sure that everything's correct. A W-2 is a reconciled, it is actually a tax form that's reconciled, it's checked, it's gone over, the employer approves it, and we send it to you. All kinds of information is on there that is not on your paycheck, your pay stub, your last pay stub, or voucher for people that have direct deposit. Okay, now in this case, and in any other case where a preparer is doing things wrong, deliberately wrong, not the guy made a mistake. Again, a mistake. We had a mistake this week. A piece of paper got left out in the paper shuffle. It was left at the last station. It didn't make it through with the return. We made it right. Okay, that's a mistake. But when you have a blatant error like this is borderline tax fraud. There is a form, a complaint. It's called Complaint Tax Return Preparer. It is form 14157. 14157, the 14157 form. And that form is that you have a complaint about your tax preparer. Then there is the form 14157A. That is tax return preparer fraud and misconduct affidavit. Okay, and that is serious. Now, getting back to the mistake, we will do everything to make it right. We'll see it all the way through to completion, and we'll try to resolve the problem. Because I'm an enrolled agent, I can talk to the IRS and get it through. Now, I have errors and omissions insurance. I have insurance to cover mistakes I make, and I always ask clients who are shopping for a tax preparer or are thinking about changing, please ask any person you go to, do you have errors and omissions insurance? Most CPAs will, I can't say they will, most tax attorneys will, most professional enrolled agents will, but it's not a requirement. I even have insurance in case my computer gets hacked and your identification gets stolen. I have, it's kind of a new thing. Well, not that new. They've been doing it for a while now, but it's new to my carrier, and I added it. I said, yes, get that on there, because I worry about that. I worry about getting hacked, and I want every protection for you. So that's how we take care of it. There was another one in this same vein And this is the kind of preparer you should avoid. So, person's looking for a new preparer. They said, my preparer, this is a real situation here. This is not, my preparer keeps asking if he could put that I went to college and other things like that. Now, this is in their language. And also asked if he could change how much I made so I can get more. And I told him no, that I didn't want to get in trouble with the IRS. Well, we did some things. The person didn't tell me what things they did. We did some things, and now I owe the IRS money over $4,000. What can I do? Well, first you need to repent, okay? Because if you allowed him to do something, you need to repent. He is not liable for this problem. You are. But he committed the fraud. Yes, he did. But you signed the tax return. You approved it. And really, it's like I told one person, I had somebody come to my office with some questionable dealings, and I told him, don't do this. I said, the IRS is going to create a problem in your life if you do this. And it boiled down to money. But something should tell you something's wrong. Something should tell you something's wrong if last year you got back $1,500 and this year your tax preparer tells you you're getting back $5,000 and there's no real reason. Okay? Something's wrong. So please stop and look at that. Got some other questions like that in that same vein. Now this one I didn't understand, and we're going to take a break right after this, and I'm going to get to the taxable 10 incomes that are not taxable, that people often think are. And we'll finish the program with that. But this one I didn't get, and I'm going to follow up with this person a little bit more. I want some more details on this, because it went to a CPA, new CPA, helped them with their QuickBooks, did a few things for the business, they're self-employed, and tax time, CPA emails them at 2 in the morning and says that the taxes were filed the day they're due. 2 in the morning, sends them an email, says taxes are filed. Okay, first of all, that's not right. You're supposed to sign. So maybe the guy's not telling me something here. I don't know. I want to go back and get more details. But you are supposed to sign documents saying that you approve this. Then we've got a flurry of activity going on over here. Okay. Paperwork. Got to do the paperwork. So sign the return. So something's wrong right there. And then they get a letter from the IRS saying that they owe money. They call the CPA, and the CPA said, oh, some forms got stuck in the fax machine. The fax machine to where? You don't fax tax returns in. So this whole question is a little suspicious. But the part that caught my eye was the man never offered to reimburse them their money, never offered to fix it, never offered to follow through, and never offered to make it right. And that's what makes this wrong. I want to know a little more information. And got several of those like this, where people went to the tax, had it done, there was a mistake, and now the guy's not even returning their phone calls. Again, that's wrong. I had a person come this week, got a letter from the IRS. I did not do their tax return. They came to me for help. Letter from the IRS, they went back to the preparer. The preparer did not sign off on it. It said self-prepared. And the preparer told them, it's your problem, not mine. I had nothing to do with this. The person came to me, what can I do? Well, file a complaint on that person. But that just shows you the seriousness of this. That person's not even helping them, let alone offering to give them their money back, let alone fixing the mistakes. Okay, so I think I've beat that one enough. Bottom line is, just know who you're dealing with and interview these people, and don't assume just because they do this, they've got your best interest at heart. Let's go ahead and take our last break, and I'm going to get into 10 sources of income that are often thought to be taxable but really aren't. This is Gilbert Talks Taxes, WCAB 590 AM.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
We are back. Gilbert Talks Taxes. Okay, so before I get into this, so next week we've got 11 minutes left. Next week we're going to be live, NC Tractor Supply, right there, Railroad Avenue, right there at the new building with the shiny blue roof. Just look for the big shiny red tractors. Okay, come on in and see us. This will be a live program, so you don't have to come here to the studio to walk in frame and interrupt me. You can come there and interrupt me. Okay, we're going to have Jesse James, Railroad Express, is going to be there. Donuts and coffee. Well, he's sending donuts and coffee. I don't know if he'll be there. He's got a busy morning thing going on there at his place. We'll be there from 8 to 9 live. Then Phil's going to have open house from 9 on. I think he's going to have hot dogs and chili and good old time. You guys are going to be broadcasting live from 10 to 1. And I don't know what all he's got planned, but it sounds like it's going to be great. But we will be live. Gilbert Talks Taxes, supporting small business at every point. It might be Gilbert Talks Tractors. I like that. I like that for a program. But I've got to get the price of pork bellies and silage. I want to do like an Orion Samuelson program next Saturday. I really do. And you know, he wore a suit every time. He's standing out in a pasture with a farmer talking about silage in a suit. It doesn't get classier than that. I remember his show. It was great. It was great. So we're going to be there next week. That will be the last show of the season for this tax season. The last day to file your taxes, April 15th, which is a Monday. So you have till midnight that Monday to file a file extension. If people ask me, what can I do now to reduce my tax load or get a bigger refund? You can still contribute to an IRA, folks. We do those, but you can get those, a lot of places. If you have your own IRA, you can contribute to it. $6,500 if you're over 50, $5,500, which this year it's up. It's up. You can contribute more. You can still contribute to your 2018 IRA and get a tax deduction. I've had quite a few people doing that this last couple of weeks. I had one yesterday, and I'll probably have a few this week contributing to those IRAs. You can still do that. That's pretty much about it at this point, okay? So as we're wrapping up, so 10 things or 10 income that's taxable or not taxable that confuses people. Disability insurance payments, okay? Now, usually disability benefits are taxable, and this surprises a lot of people, especially when you've had a disability claim going back to date of disability. The thing goes through the court system. You may be denied. You have to appeal. It seems to be the standard procedure. Again, I'm not an attorney, but what I typically see is many people get denied the first go around, only to go back on appeal. And so what happens is when you get your money, you will get 3 or 4 or 5 years of money. I just had an attorney contact me last week. He has a client that has been in a disability battle. There's a lot of details here, so it's not just that the poor guy's been fighting, but he's been in this battle to get final detail. 12 years. His disability payment check, and it's pretty much wrapping up, is going to be somewhere in the neighborhood of $250,000. So he called me up. It's called back pay. Called me up to go over the details and what kind of tax this man's going to have to pay, and it's going to be a whopper, because it is all taxable in that year. Now, there is a way to spread that out over the prior years. There's a formula for it. That's a whole other thing. Just know it exists. But it is taxable is the point. Okay, now, disability benefits, I'm going to read this, is taxable if they come from a policy with premiums that were paid by your employer, which is where most disability payments come from. Okay? However, there are other categories of disability benefits that are not taxable. One example that I see a lot is if you purchase supplemental disability insurance through your employee with after-tax dollars, okay? And any benefits you get from those plans, so basically a plan you bought, you got it through your employer, because that's usually how they're offered, but you paid for it with after-tax dollars, okay? Those benefits are tax-free. If you purchase private disability insurance, same idea, with after-tax dollars. Again, the idea is that's money that's already been taxed. Those benefits are not taxable. Workman's comp, okay, to pay, it's pay you receive if you're unable to work because of work-related injury. Workman's comp disability payment is not taxable. Okay, now if a rule of thumb, if you get a W-2 from an insurance company for some kind of disability payment, it's taxable. They already know. Sometimes they'll even withhold tax. Typically they won't. It's taxable. Okay, so rule of thumb. So don't bring me a W-2 and ask me, is this taxable? We'll do the inquiry, we'll find out, but typically it's going to be. Disability payments under a no-fault car insurance policy, okay, for loss of income. It's a rider. A lot of people don't have it, but it's a rider. Earnings, it's to loss of earning capability. Those are not taxable if you've had an injury and those riders kick in. Employer-provided insurance. Now, the IRS says generally the value of accident or health plan coverage provided to you by your employer is not included in your income, okay? But there's always exceptions, okay? Employer and employee contributions to an HSA, a health savings plans, are not taxable. Employer-provided long-term care insurance and Archer MSA contributions are not taxable. Okay, those are not taxable. You will get that little form showing how much money you got from your health savings plan. As long as you spent that money on medical-related expenses, that money is not taxable. And typically you spent more than that. So you might be putting $2,000 away a year. You used $1,900. You'll get that little that form. They'll say Archer, HSA, whatever on there, and you'll see that is not taxed. Doesn't mean it's taxable, but I do have to put it on the tax return and match it to qualified medical expenses paid. I'm talking real fast because I've got 4 minutes left. Gifting. Major confusion with gifting. The person making the gift is the one that pays the tax. Okay? You make a gift, you pay the tax. You receive a gift, you do not pay tax. Now, there is a gifting exclusion. Okay, it's $15,000. You can give money, husband and wife can give whatever, a granddaughter or somebody, they want to give her a gift. You can give up to $15,000 and it is not taxable. Why is this an issue? I see it with older people that have large estates and they want to start whittling down their estate. They're in their 80s. They've got way more money than they're going to need. They've got insurance. They've got these other things. Health is good. They've got their surplus money. They want to start giving it away to children, grandchildren, people of all kinds. The recipient does not pay the tax. Now, even though the parents, there is that $15,000 exclusion, there are other types of exclusions if there's trusts and estates with gifting, okay? So gifting, the person receiving does not pay the tax. The person gifting, however, does pay the tax. Life insurance payouts, okay? Life insurance payouts are not taxable. I get that from a lot of people. They are not now, but be aware there are some exceptions. The rules are complex. The IRS has a whole publication about it, Publication 525. It's an easy read. It explains it very well. Taxable and non-taxable income. It describes the exceptions, but life insurance payouts typically are not taxable. So you're the beneficiary, a person. It doesn't have to be family. The owner of the policy can name any beneficiary they want, and the person insured is not always the owner of the policy. And this is where a lot of the confusion comes in. I can take out a life insurance policy on my wife. I am the owner of the policy, not her. She's the insured. And in that policy, I can name any beneficiary I want. Anyone. You can name a trust or an estate a beneficiary, a charity, anything you want. If there's no beneficiary, then the money goes to the estate of the owner. Okay, so life insurance payouts typically, though, are not. Sale of residential property. Okay, we get into primary residence. 1 minute left. We get into primary residence, excluded up to $250,000 if you're a single filer, $500,000 if you're married filing joint. Capital losses. Capital losses are not 100% deductible. $3,000 a year till you burn it all up. One of the questions I had was a person thought their taxpayer had made a mistake because of that. They had like a $20,000 capital loss. No, you're going to have that $3,000 a year till you burn that $20,000 up. Now, if you have a capital gain, it'll offset a capital loss. That's a little financial strategy I do called capital loss harvesting. Some of you that have big capital losses, give me a phone call. There's corporate income in other states, inheritance up to $10 million. Go Trump. Municipal bond interest. Municipal bond interest is exempt. How it's exempt, you got to look, but it's exempt. Either the state level, the federal level, and or local level. So if you've got municipal bonds, just know, and I had a man this year who had $22,000 of bond interest. Yes, he knew what he was doing. His state's tax was zero. That is it. Time is up. Thank you for listening. Remember, next week, we're going to be live. Railroad Express. Tune in. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Steel slats. But this isn't a new barrier on open land. It's a replacement.